going on, everyone? So we got to talk about Bitcoin. What just happened today? We're literally trending back up to 100K. There's a strong possibility that we're going to get above it. We're going to talk about what's about to happen and what's going on in the market, why it's going up. Remember, I'm not a financial advisor. None of this is financial advice. But look at this, 97.1K. That's actually very, very, very good. So right now we're seeing that we are getting a little bit of a rejection here. But when I look over here at the MACD, it definitely looks like it's about to break out. You can actually see those bullish candlesticks increasing. Just look over there at these green candlesticks there. That's like the nicest sight ever. After seeing this drop right here from these candlesticks on this MACD. So we're about to see the volume shift to upward momentum. That is actually pretty good. But one thing I am noticing, and by the way, this is the 30-minute chart, but one thing I am noticing here on the RSI, you are seeing it turning downwards. So we are seeing the RSI kind of turning downwards, almost like it wants to cross and go downwards. And we are seeing a bit of a rejection here. So there is still the possibility that we have a small little increase in the MACD here, followed by that major pullback. And it happened back there, and it happens all the time. So there is a possibility that this is like a false breakout and that this is a bull trap. There is a possibility. Now, a lot's going on in the market, but I'm going to tell you right now. Look at this. So the fact that we were able to pump off of the news of us just getting held back from the interest rates, right? Them not lowering the interest rates, them just kind of pausing it. The fact that we are pumping off of that, that's kind of bad news. It tells you that the market kind of already priced in that. Like the market, everybody knew that they were going to hold it back, right? Everybody knew that they were not going to let it slide. They were not going to approve it. They were not going to pretty much, like Jerome Powell was not about to let Trump bully him into lowering interest rates. And that's pretty much what happened. That's pretty much what it is. He was like, no, we're staying. We're doing what we said we were going to do from the jump. We're not going to cut. We're going to wait. And that's exactly what happened. So that's pretty much why things are going the way they are, is because Jerome Powell decided to hold the rates because of tariff uncertainty. And that's actually kind of crazy because Trump, almost tried to bully him into doing it. So that was the wrong move. That was the wrong move. Maybe Trump should have did it a little bit nicer. But anyways, what we have going on right now inside of this market is a lot different than the stock market right now, because the stock market kind of started to pull back off of that news, but then it started to recover. And then you start to see Bitcoin also recovering too. But the thing here with Bitcoin, even before that, the Bitcoin was doing well. It was doing better than the stock market. But what we are seeing right now is that we are making our way up here. So if we do not get rejected over here at these levels, then that means that our next stop is pretty much 100K. Well, 99K. So if we break this 97, 98K area, we're probably going to immediately shoot up to 100K. And that's a level that people definitely want to watch out for. Because if you don't know nothing else, just know like that level at 99K, if this level is broken and we get to 100K, then the Bears can kiss everything goodbye. I was about to say something else. They can kiss everything goodbye, the Bears, because it's almost immediately going to shoot up. First, it's going to shoot up, probably stop around like 100, 200, 3,000, just to confirm that it's real, right? Just to confirm everything is good, everything is real. And then from there, it's going to shoot up to previous all-time highs. If we can get past 99K and actually break that 100K level. So just let that sink in a little bit, all right? Now, we have the 4-hour chart open up here. Something really nice is going on in the 4-hour chart. You can actually see here on the RSI how it's curving upwards. Look at that. That's actually bullish on the RSI on the 4-hour chart. And then you can even see here the top one's also curving upwards, and eventually it'll cross and then drop back down. So that could be us going up to 99K, possibly breaking 100 and then pulling back. But even if we break that 99K, that's still pretty bullish. We still have a long ways to go if we do, but it's still bullish. The MACD still looks bullish here. So it's still not overbought. It was definitely oversold in this area when we dropped down from like the 98K levels down to 93K. That was a little bit oversold, and you're seeing it being shown here through the MACD. So yeah, we had that overselling, and now we're going to shoot up. Let's hope that it doesn't get overbought. But even if it gets overbought, we could just see a small minor pullback like here. Like let's say we go all the way up to 99K and just shoot up to 103. Yeah, we'll have that minor pullback going back down to 98K. but then that could give us the momentum to get back up to 108K all-time highs. And if we do that, there's a possibility we can set new all-time highs. Now, there is a possibility everything could go bad. Like, remember, they are meeting to talk about some trade stuff with China. I think they're doing it in Switzerland or something like that. I don't know. Something like that. But China is meeting with the U.S. I don't think their presidents are meeting, but representatives from each countries are meeting to actually make a trade deal. This could be exactly what we need, or it could be exactly what we need to avoid. Because if something goes bad inside of this meeting and the news comes out like they had an argument or they just didn't agree on anything, then that means we've gotten nowhere and we will see the prices crash inside of Bitcoin. So we do not need to get any type of negative information, right? We cannot have any negative info on this whole trade deal. Like if the trade deal goes bad, we can't have that. And I'm kind of surprised that we did not go down because of that the India Pakistan stuff. Like India and Pakistan are all out war right now. Like it's like Russia, Ukraine all over again, Israel and Gaza all over again. But this time, like the market didn't react. Like India just bombs Pakistan, and the market is like buy more Bitcoin, buy more Bitcoin, right? And like it was selling off before, but when all the whole Israel Gaza stuff, and then Russia Ukraine, like it was selling off, but now it's almost like the market is immune to wars. Like unless it's going to be the U.S. or something major where like a bunch of airstrikes keep hitting. Because I think it was only like one airstrike from India to Gaza, or no, from India to Pakistan. Well, let's say like India started bombing their capital over there, and then they started bombing their capital out in India. Yeah, something bad would have happened then, and then the whole market would probably be down. But I guess it wasn't too bad for the market to not go down. But anyways, we are doing decent volume, 65.2 billion in volume. We're still, a little bit choppy right now, 1.2% up in the last 24 hours. Could be better, but we are still doing good. We're still seeing a bunch of altcoins are also pumping as well. The market is inside of a good space right now. But hey, at this point, we just need to do something, whether it be a really big rise to the upside or a really big drop. Something needs to happen. Okay. Now, we kind of talked about the 4-hour chart. Now, let's go back over here and look at the daily chart, the 1-day chart. So I like to look at all of them. We have to look at this holistically. We cannot be biased whatsoever. Yeah. So this is going on. I just kind of want to let this sink in, just so you guys kind of understand what's going on. Like there's no words needed for what's going on the MACD and what's going on with the RSI. There's no words needed. You should be able to look at this and be like, oh no, that's not good. So let me explain to you why this is not good. This is overbought. The daily chart is overbought, and it's because of this. All of the gains from April 7th all the way up till now is like literally a straight rise upwards. Literally, it went straight up, and that's not good. That's overbought. It can stay overbought for a good amount of time. Don't get me wrong, it can. Like look back here, it was overbought back here, but then it sold off. But even the selling wasn't overselling. So look at how overbought it was back here inside of November. This was way overbought, but it was needed because we were coming off this long choppy area, almost a whole year of going sideways, almost a whole year of that going through this one channel. This was the most beautiful channel ever, and the fact that we stayed in it so religiously for almost a whole year, that was a nice thing to see. But right now we don't have structure in the market. There is no structure at all right now because it's just not like it's not structured whatsoever. Like you can try to draw a bunch of trend lines, but you're like, oh my god, like the trend lines keep getting broken. There's no structure. Like we had a nice downtrend line here, right? From January all the way till April, right? But then it got broken by this overbuying, and now we tried to create a trend line here for the overbuying, but then it quickly got invalidated up here, and now we got to try to create another one. But now we just got to wait to see what's going to happen because, there's just no structure at this point. Like this was easily predictable. Watch the videos that I was making around this time period, and let me tell you guys, this was from around late February, right? February 28th. Let's just say March 1st, all the way through October. Watch those videos I was doing on Bitcoin, and you'll be like, oh, okay, yeah, this we knew exactly what was gonna happen. I was saying it the whole time. Look, we're gonna go through this channel, and we're just gonna keep bouncing off the top and the bottom of this channel until we finally get that breakout point. And we got it. We got the breakout point. And I was saying, look, if it breaks down below this area and it drops anywhere below here and goes down to the Fibonacci, I was like, look, we are going to have some bearish movements. But it didn't happen. We went bullish. I was like, look, hey, if we get above here, we are going crazy. We did. We broke the Fibonacci. And yeah, now we're working our way up here to this Fibonacci. And I mentioned it inside of this, all those videos too. I was like, look, 118K is probably going to be the peak for this market rally before the next major pullback. Like, this isn't a major pullback. From 108K to 73K, that's a pretty big pullback, but it's not major. I believe that major pullback comes when we hit 118K and we pull back to 58K. That's a major pullback. And the reason why I say 58K is going to probably be the bottom of this next market rally, the one that we're in now, is because we were there for so long. Like, we were consolidating in that area through that channel for a very long time. And then when you look at the last rally, where were we at for the longest before that? Well, we were around this area here. So if you look back before that, we were around the 9K, 8K, 10K areas, and then we blew straight past the whole 20K areas. So when we came back and consolidated, we consolidated between the 16 to 20K, well, 16 to 30K areas. And you see how we blew past that with flying colors, but we had the major resistance all the way up here at about 18K. So when you think about it and you kind of play that to where we are now, what area did we just blow past with flying colors right before this? Well, the area that we blew past with flying colors was this area right here, from 45K to 58K. So if we were to bottom out in the market, that bottom would be anywhere between 58K to 45K. And that's just kind of looking at past performance till now. Because if you also look at it, the previous highs, let's go all the way back again. So look at this. This is actually, is it really nice to go back and look at what all the other markets did, right? What all the other bull runs did. So we bottomed out at the peak of the last bull run. So this bull run that I'm talking about now, it went on from 2021, the beginning of 2021, and then it ended pretty much flattened out and crashed like mid 2022. But it ended like at the end of 2021, and then it started to go down and crash into a bear market, right? And then the bottom of this bear market was supporting at about 16K, which just so happens to be the peak of the last run. The peak of the last run inside of 2017 was at about 18 to 16K, 18K. So now what we're seeing, if we're going to bottom out, we're going to bottom out a little bit below the last bull market peak. What was the last bull market peak? Boom, 68 to 58K. We peaked here around 58, and then we peaked here around 68, but give or take around there. And if we do go below it, it'll just be slightly below it down to 45K. Why? Because when you go back and you look at what happened previously and you do the previous run backs here, you can see we bottomed out at 15K, right? And that's this area right here. We bottomed out at 15K. We topped out at 19K. So we went a little bit below it. So yeah, if we're doing the math, we could peak out at 118 and then crash, bottom out anywhere from 45 to 58K. So yeah, it's pretty simple. Now, when I say about 119K, like that's on average, we should be getting there and then pulling back. That's like the average prediction. But like extremely bullish prediction, getting up to like 190 and then getting rejected, not being able to get the 200, I think that comes the next cycle. I think our next cycle is going to be from 118 all the way up to 190, 200K. Because this cycle was this Fibonacci that we're trying to break. We're having a lot of struggles, but at 120K, 119K, I believe we're going to get that massive pullback from 58K to 45K. So this is a really good time to be in the market. Well, no. Let me take that back. We're almost peaked out in the market. So we're almost peaked out in the market. It's a really good time to be trading the market. I mean, like in and out, because it's so volatile. But because when you look at it, you're like, if we got up to 119K what's the likelihood you think that we would keep running? Me personally, if I see us getting all the way up here, I'm thinking about doing shorts on this. But unfortunately, inside the United States, it's very, very hard to do stuff like that. Like, there's only a few exchanges that I can do stuff like that on. Like, I think crypto.com offers it, but it's extremely hard. You got to do it on some type of DeFi platform because the US, they make it hard on us. They make it hard on us to trade crypto like that. But anyways, this is looking nice. This is looking nice, but the daily chart is kind of looking like a little bit of red flag. So let's go over the daily chart. Remember, I said this, like, you guys should be able to look at it and be like, it doesn't look too good. The reason why I say that is because look at how overbought we are. Look at how it's curving down on the RSI. Now, we can be even more overbought. Like, we were even more overbought in this area. So we could stay overbought for a long time, and we can even increase in that overbuying, right? But just the fact that we have this amount means we don't have much juice left to run, which is why I'm saying the peak could be 119K if we break 100K. And then after that, we have to break 108K. So if we can do all that, then yes, we can get to 119. But 119 is supposed to be this bull market's peak. So remember that. Like, don't be like looking at this like, oh, we're at 97K. We're going to keep running. Like, at this point, if you're not already in Bitcoin, you don't really want to start dumping all your money in it. You can dollar cost average. Definitely don't dump a lot in it because we only got a little bit more left to go till we peak out at 119 to 120K and get rejected. Now, we might still continue to go. Like I said, I'm not a financial advisor. None of this is financial advice. We might keep running a little bit more, but this is where the Fibonacci resistance is. So usually if it does, it gets only a little bit above it, a little bit. So if we go to the last peak or the last run, we were supposed to peak out at 58K, but we kept running a little bit more. So we got up to 69K, right? So in this instance here, if we were to do it, we would probably keep running a little bit more to 128K, end up getting rejected up there or something like that. Or maybe even a little bit more and getting rejected. Also, when you come back here, we were supposed to peak at the top of this Fibonacci at 17.6K, but then we peaked at 19K. And in general, all the percentages are almost similar. Like, they're all like very close to each other. The only reason why the percentages don't look like that is because they're different numbers, like they're lower numbers. So if you look at it here, like this is it ran up extra by like 12%, right? But then if you want to go ahead and run the same numbers with higher prices, you're going to get generally around the same amount. It's going to be a little more than 12% because more money flew into the market. But if you do this down to the bottom here, that's 16%. So we went 16% over our Fibonacci peak that we were supposed to peak at. So the first one was 12%. That one's 16%. And then we really haven't even peaked out for this one, but let's kind of be like, hey, let's say 15%. If we get 15% above this Fibonacci, that would put us around 137K, 135K. If we were to do 12%, that would put us around 133K above this Fibonacci here. So we're looking about 15% above this if we are going to play it like we did the last two times. So that should stop around 135, somewhere around there, anywhere from 120K up to about 135, 137K. So this is just if we're looking at the last previous runs. So yeah, I just like to make these predictions. We got to do good price predictions. We got to be realistic here. We can't be like, hey, Bitcoin's getting to $1 million this bull run. People are lying to you if they're telling you this bull run we're getting to $1 million. Like, it's not going to happen. And I just kind of want to be really realistic here. $1 million Bitcoin would put the market cap very, very high. Now, it's possible in the long run. Yes, it's 100% possible in the long run. But right now, like, $1 million Bitcoin, like, you got to be crazy. Like, that's 19.8 trillion inside of market cap. Now, granted, when you look at something like, let's say Apple, Amazon, Meta, these are like $2.5 trillion companies, $3 trillion companies. Bitcoin's priced at 1.9 trillion. But give it 10 years down the road, Apple and Meta and all those $10 trillion plus companies, close to 19 trillion. Bitcoin, give it 10 years down the road, $1 million Bitcoin, close to 19 trillion. So I would definitely say it's possible, but long term. All right. Now, let's go ahead and read this. This is about the Fed pretty much holding the interest rates. It's because of all the tariff stuff, but let's go over it. So, Fed holds rates because of tariff uncertainty. Let's get into this. The U.S. Central Bank has warned that President Donald Trump's tariffs have created so much uncertainty that it is unsure what to do about interest rates. The Federal Reserve announced on Wednesday it would keep interest rates unchanged, despite pressure from Trump to lower borrowing costs. But Fed Chairman Jerome Powell said the economic fallout from Trump's tariffs meant it was not at all clear what the bank should do next. All right. The decision marked the third in a row without action, leaving the bank's key lending rate hovering around 4.3%. And they want to make borrowing cheaper to stimulate the economy. So Powell said if Trump's tariff policies remain in place, they were likely to generate a rise in inflation, a slowdown in economic growth, and a rise in unemployment. Typically, the Fed cuts rates if it believes the economy is struggling and raises them if prices start to rise too quickly. But the bank, which is set up to make policy independent of the White House, said tariffs had raised the risk of both an economic slowdown and faster price raises. So this is complicating both. So this is pretty much what's going on. And they're obviously talking about the possible 145% tax. So not even possible. Like that's pretty much what's going on. 145% tariff thing, which is not actually 145% when you actually do the math of what they're doing. But that's neither here or there. But still, it's a pretty high tax, right? Logistics firms and ports in the U.S. have since reported sharp drops in trade, while analysts have warned that risk of recession has ramped up significantly since the start of the year. So there's no doubt that we're probably going to end up going in a recession, but that's probably what's driving Bitcoin right now in the peak, because people in Bitcoin, they're just trying to hit the peak right now. So Bitcoin's going to peak around this area here, anywhere between this area here in this box, and then after it peaks, you better just yeah, I don't know what you want to do. I'm not going to tell you to sell or what. You do what you do. Remember, I'm not a financial advisor. None of this is financial advice. Do what you do. But we're probably going to end up seeing a nice big old drop. And like I said, 58K to 45K should be the bottom, and it could go down even lower, and then the top should be anywhere from 133 to like 120. And also, I kind of want to show you guys this, because like when we crash, I just want to show you guys how much we typically crash by. So I will take this box here. I'll take it from the peak, and from the peak, let's go all the way down to the complete bottom here. So this is where we bottomed out. Right about here we bottomed out. And let's see how long it took also. So it took us approximately 381 days in the bear market to reach the bottom, the bear bottom. It took us 381 days. We went down approximately 76.99%. So we went down 77%, and it took us 381 days to bottom out in the bear market. Let that sink in. So now that we know what we did over there, let's go ahead and look at the last time when we peaked and when we bottomed out. So the last bull market, this is where we peaked. We peaked back here in December 2017 in that last bull market. So this went all the way from there, all the way down to here. This one took 367 days to bottom out, and it was 83.33% to the bottom. So look, like you got to compare these each time. This took 367 days to bottom out, and we had 83.33% inside of downtrend in there. This downtrend was 77%, took 381 days to bottom out. Now, look at where we are here. So let's say, hypothetically speaking, we get a little bit above, like I was mentioning before, and above that Fibonacci, and we go from here. I don't know when we're gonna start this, so let's just put it. Let's say we peak out around let's just say August. Let's say we're peaking out around August, right? Oh, that's Fibonacci. All right, so we're peaking out around August here, and we're going down from the bull market. We got to look for where is the 77 to 80% percentile. Oh, that kind of brings us down here. 45K is 65.79%. So I was saying we could probably bottom out around here, around like 65.79% if we're going all the way from the top there down. But if we're comparing to the previous rallies, then it could be a lot more. Then we could possibly see 28K if we're comparing to the other rallies. So yeah, like a 300-day, 380-day bear market, something like that. It would look similar to this. It would go up and then it would bottom out around here, 300 something days, and then around the end of 2026, somewhere around there, we should start, going up for the next rally. So that's if we're comparing. Because look, it got a little bit larger each time because as the prices go up, the percentages also go up. Well, the percentage actually went down. Actually, it crunched a little bit. So remember, our first bear. All right, look at this. Our first bull market going into a bear market, we lost 83 point. We lost 83.33%. Right. Our second bull market, we lost 77%. So our third, we should be going down a little bit more. So let's just do some simple math here. So we had 83.33 that we lost in that, right? Minus 77%. So that's a 6.33% change. So let's just say a 6% change. So if we're at 77%, we might be going 6% lower if we're just doing the math the same way. And maybe the percentage goes up a little bit more. Maybe the percentage increases on the next route, on the next bull market, bear market. So maybe that 77 might be a 8% drop, right? Maybe 69, a little bit of 69 action right there. Maybe it's an 8%, right? So let's look at 68% to 69% instead of looking at 77 because we can't look at it as the same as the last one. Remember, these percentages are decreasing. It's going down less and less because the market is becoming more stable, more money is flowing in, and now institutional investors are inside of Bitcoin, so it's not going to drop as hard because those are the type of people that put it inside of these ETFs and they hold it there. So it's not going to drop as much. That's why we're seeing the percentages are going down in the bear markets. Like our first bear market, like I said, we lost 83%. Our second bear market, we lost 77%. Now this bear market, do you think we're going to lose 77 or do you think we're going to lose around about 68, 66? That just so happens to put it in the same range that I was talking about before, 45K to 58K. And this is kind of how, you got to back test this type of stuff. You got to test every single scenario out, and then you got to kind of put them all together and be like, look, after all the math that I did, after all the charting that I did, after all these predictions that I did, we got the same answer every single time because we back tested it according to the previous markets. We back tested it according to the 2017 run. We back tested it according to the run over here that we also had in 2021. And now we're back testing it. Well, also 2020 to 2021. And now we're back testing it to our current rally that we're in now, which pretty much started at the end of 2022. I don't care what anyone says. Our bull market started at the end of 2022 and the beginning of 2021 or 2023. So let's just say the beginning of 2023, we started this bull market and we've been in this bull market since the beginning of 2023. It's been a long time coming. We've been in a bull market for 2 years. Let that sink in. We have been in a bull market for 2 years, really 2.5 now. So the beginning of 2023, all the way till now, we have been in this bull market. I don't care what no one says. We did not go below this point here after we started in 2023, and we've been keeping it up. Yeah, there's been some sideways movements here and there, but we have been in a bull market since 2023. We are about to hit our peak, and we are now about to have a major pullback once we peak, because then we're going into the bear market. We're entering a recession is pretty much what I'm saying. And everything is lining up. Everything, the tariffs, everything, the wars, everything is lining up, and we're about to peak out. And this is actually very good for the people who are traders like myself. Yeah. So, yeah, a lot a lot of shorting is going to be happening in these markets. You definitely want to be careful shorting, though. You can lose a lot of money. But yeah, a lot of that is going to start happening in these markets once we peak. Like I said, around 130, 128K, really. That's what I'm deciding. I'm probably going to start shorting, but it sucks because I got to find a way to short these markets because, in the US, we can't just do it like that. Like, I used to use MEXC, and then my account got deleted because I'm in the US. So I can use crypto.com, but there's more fees, and it's just it's not the same. Anyways, we're doing fairly well here. We're doing fairly well. I'll keep you all updated. I'll let you all know what exactly is going on. But yeah, let me know what you guys think about this because this is getting crazy. But also, we got more news. Bitcoin, $1 billion daily realized profits signal late stage bull market. Exactly what I'm talking about. We are in the late stages of a bull market. We started in 2023 and now we're ending strong in 2025. This bull market will be over very soon when next time we peak out. That's why you're seeing the pump now, because the pump is really just trying to price in the top of the bull market. That's all we're doing. We're just pricing in the top of the bull market, and we're almost there. So, like, for all you people that are like, oh, I'm going to start getting into Bitcoin now. I'm going to start getting into crypto now. Y'all are getting in at the peak. Y'all are getting in at the bull market. And, like, they're getting in at the peak. Don't do that. Like, if you haven't started buying Bitcoin and everything else now, don't start it. Like, you can maybe run it up a little bit towards 120K. Like, you should be good, but that's still risky. Like, that's such a small percentage of gains. Like, let's be honest. Like, if you try to run it up from 97K up here to around the peak, okay, like, cool. You got a good what is that? 33% in gains, 25%, 30%. So yeah, you'll get a good 30% in gains, maybe 20%, depending on when you get in and when you get out. But it's not worth it. It's not worth it when you can potentially lose 66 to 70% if you buy in at the wrong time and sell out at the wrong time. So you guys got to be careful. Be careful because a lot of profit taking is happening. Look at this. So Bitcoin profit taking dominates as prices continue to rise, and this can easily extinguish the bull market comeback. This is huge. Bitcoin investors are making the most of the highest price levels in several months by cashing out profits. These are averaging $1 billion per day, leading to concerns that the market comeback may stall or even reverse. If you want my personal opinion here, we may see another pullback, and then we may see it breaking out again, and then we may be hitting the peak. If that happens, we're done. Bear market, finished, nothing, right? That's pretty much how it'll be. Be careful. There's a lot of profit taking, but yeah, if it peaks out, just know we're going into a bear market now. So for all you guys that have gotten value from this video, hit the like button, subscribe, share it. I would definitely say save it to a playlist. Save this video to a playlist because I wasn't going to make this video today, but I was like, you know what? Let me go ahead and make this video because I've been doing a lot of short-term videos. I've been doing videos talking about the short-term prediction of Bitcoin, and I actually started making this video as a short-term prediction. But then I was like, I could give so much more value. Like halfway through it, I was like, you know what? Let's show the long term. I'm gonna do a full video where it's only long term perspective on Bitcoin. I'll probably do that tomorrow or the day after this, and we'll go over everything on this video because a lot of people aren't gonna watch the full video, which it sucks for them because if they didn't, they might not know that we're about to peak inside of this bull market, and we've really been in it for the last 2 years. So yeah, and when we enter the bear market, from the peak of the bull market to the end of the bear market, it's usually 1 year and a little bit of extra days at the end, but it could easily end up being 1.5 years or 2 years. It all just depends. The last time, and look, when it bottoms out, it trades sideways for a long time too. Like when you come all the way back here and you look at 2017, like it went up, but then it went down. It was sideways for the longest time. So you really wouldn't have seen much gains for the beginning of 2019 all the way to almost the end of 2020. So even though the bear market stopped after a year of going down, it was still sideways for another year and a half, almost 2 years. So that's the part that you really got to remember. Same thing here. Even though the bear market stopped all the way back here, which was around the end of mid-November, pretty much 2022, we really didn't see the full benefits for a little while after that. So that's what everyone's got to pay attention, because we did kind of run up after that. You know, it took a few months, and then going into the new year, we started running up, but then we pulled back. But yeah, this has been the most craziest bull market in my personal opinion, because if you actually look at this, like, we've been running for 2 years straight, and it was almost immediately off the bear market we started running. When you come and you look at 2017, 2018, like going from 2018 into 2019, like it took us a while to really start ramping up again. Like we started going up almost half a year after the bear market was done, but then it went right back down and just started going sideways for almost a whole another year. So yeah, this was 2 years. It literally took 2 years for us to really get into that bull market cycle. But then when you come back over here, it's different. So it might be a little bit different this time too. We might bottom out, like I said, around 58 to 45K. And then from there, we just might almost immediately start running. Like we might bottom out after a year of going down, and then 2026. And that's pretty much what it shows here. Like around 2026, mid to late 2026, we should be entering into the next bull market. If everything goes to plan, we should be entering into the next bull market mid to late 2026. So this is about to end. Everyone get ready. 3 months. I give it 3 months tops for us to peak out, maybe even earlier. And then after that, we're done. After that, everything is done. It's going down. We're going to get a lot of bull traps, and a lot of people are going to get stuck, and a lot of people are going to lose a lot of money, and there's going to be a lot of euphoria. People are going to be buying at the top, and it's the same thing every cycle. I've been inside of this crypto stock market game for a long time. I would say since this first run back here, I remember getting into Robinhood like way back. I don't even want to say back in the day, because I'm not even that old. But, 2017, 2018-ish, somewhere around there, even a little bit before that too. Because I remember when Dogecoin was like had multiple zeros on it, and that I was buying like back then. But I remember like when all of this happened, like it took a while for stuff to recover. But I remember people getting stuck in at the top, and then it bottom out. And then they start seeing it go up again all the way around here. And they're like, all right, I'm going to get back in. They get stuck at the top, bottoms out. And then like, oh my God. They sell down here, and then everything goes up. They're like, oh, it's coming back. It's going to be even higher. They buy, and then they lose all of it. And then they sell at the bottom again. And then everything starts running. And then around this area here, around like 80, 90K, they're like, all right, let's all start buying. Everyone wants to buy crypto now. Everyone wants to buy Bitcoin. But we've been in a bull market the last 2 years. No one wanted to buy it 2 years ago when it was worth 15K. But now everybody wants to buy it. Now that it's worth 97K, and it's going to keep running. But it's really only going to keep running for a little bit. So y'all got a good 20 to 30%. After that, you're finished. Nothing. So anyways, this is all I got for y'all today. Hit the like button and subscribe. Save this video to a playlist. Share this video with a friend. Let everybody know. Definitely save it to a playlist. You're going to want to rewatch this a lot of times, because this will save you from buying at the peak of the market, literally. Like, be careful. I'm not even going to lie. I don't own crypto right now. I've sold. I know everything's about to peak. I have gotten out. I own a little bit of crypto, but most of the bag I had, I have sold it. And now I'm looking to do shorts once it peaks. Once it starts peaking, I'm going to start doing shorts and doing some futures on it and just letting it drop and running it up. So, yeah. Anyways, this is all I got for y'all today. Hit the like button and subscribe. All that good stuff. I'm not a financial advisor. None of this financial advice. Leave a comment in the comment section. Save this to a playlist. Send it to a friend. All that good stuff. As always, I'll be back with another video.